This video is for educational purposes only and should not be considered financial advice. Unlocking the power of inverted fair value gaps. Get amazing entries and daily bias. Outline. Intro. Uses for the inverted fair value gap. What is an inverted fair value gap? Examples. Recap. Intro. In this video, we're going to go over how you can use an inverted fair value gap to get amazing entries and also to use as a daily bias. ICT talked a lot about inverted fair value gaps, and for a good reason. They can actually be used as a whole trading system. Uses for the inverted fair value gap. You can use inverted fair value gaps on a 4-hour or daily chart to give you the overall bias for the day. You can also use inverted fair value gaps as a lower time frame entry model. What is an inverted fair value gap? An inverted fair value gap is a fair value gap that is on the left side of the most recent price action. There is usually a fair value gap from the most recent price action, but to the left of it, there is usually another fair value gap going in the other direction. That's the fair value gap you want to pay attention to. It seems counterintuitive because you want to focus on the current price action and that fair value gap. However, these inverted fair value gaps give you more clues as to where price is going. The key thing about inverted fair value gaps is to use them in context. You can use them as a jumping off point or as a reversion point for your trade. It all depends on where the inverted fair value gap occurs in the market maker model. Here are some examples. All right, let's look at how we can use inverted fair value gaps as jumping off points. We see a 4-hour chart here on gold, and I drew out several inverted fair value gaps. This one here, this one over here, and this one up here. And what we're going to look for is how price reacts to these levels on a 5-minute chart. Remember, in my previous video, I told you to look for the higher time frame correlation from the 4-hour chart to the 5-minute and the 1-hour chart to the 1-minute. We also see this is a market maker model to the upside, and this is one to the downside. So you want to pay attention to where you are in the market maker model. Of course, this move up here is going to be a level 1. This is a level 2, and then this is a level 3. So we want to get involved between our level 1 and our level 2, and we're taking it to our level 3. We can also use Fibonacci extensions to see where we are as well. Our level 1 happens around 1.618. Our level 2 happens around the 200 level. And then our level 3 terminates around the 2.38 level. Here's a 5-minute chart. After that first impulse, we see this inverted fair value gap. Now, of course, we're meeting resistance, but we're not looking to sell. We're looking to buy because we're looking for that inverted fair value gap to be our support. Now, of course, you want to trade when it gets above it, but there are a couple trades as it moves through it. One other key thing to pay attention to is that you want to see price take liquidity before it moves to the upside. And usually you want to see it complete a level 2 move. Here we have a level 1, but no level 2 has been created. Once the level 2 gets created, it takes liquidity of this level 1, and that's where you see your move upward. Also, what I like to see is a breakaway gap. I call it a bag. You get a breakaway gap, and that gives me confirmation the price is not going to retrade back into this gap. And so I'm confident to take my trade. We get a trend line break and another 5-minute inverted fair value gap. You see this fair value gap here. Price dips into this fair value gap to the upside. Then it bounces off of the inverted fair value gap. And that's when you enter. So you can take this all the way up for a 2-to-1. And this is during the late afternoon session for New York. During the Asian session, you see price created a full market maker model to the downside to close off that inverted fair value gap. It also hit this one from the previous day and then gave you an opportunity to get involved after a trend line break. And then you can take that up for another 2-to-1. And your stop loss should go behind this inverted fair value gap. You don't have to go all the way down to a swing level, because if it's going to go past this inverted fair value gap, it's going to go down. This next trade happens during the New York session. We see during the 9 o'clock hour, price dips back down into an inverted fair value gap after touching another 4-hour inverted fair value gap. This is a 5-minute inverted fair value gap that it dips into. Also, not really coincidentally, it happens after a level 2. So we have a level 1, then a level 2 created. Level 2 takes liquidity. It dips into this inverted fair value gap after a trend line break and another breakaway gap. And then price jets off to the upside to create level 3 and another level 1. You can get your 2-to-1 right here up into the 50% level of that 4-hour inverted fair value gap. In this trade, we see another trend line break, another break to the upside, creating a breakaway gap. This is a level 1. So this is not as high probability as a level 2 trade, but this is still respecting structure, bouncing off an inverted fair value gap from that 4-hour time frame and then moving to the upside. You could take this trade or wait for this level 2 to be created, and then price dips back into that inverted fair value gap from the 4-hour chart. It's also dipping back into a 5-minute inverted fair value gap. Then it moves to the upside. You don't necessarily get your full 2-to-1, but you'll still get a 1.5. And you want to pay attention to this action right here when you see it break a trend line. Sure, it continued, but sometimes it'll turn over. So you might want to close your trade once this happens. To recap, using the inverted fair value gap could quite possibly be the game changer for your trading. You can also use it as a strategy on its own, or combine it with your current trading strategy for more accuracy and confirmation. We hope you got a lot out of this video, and please like and subscribe for more videos like these. Thank you for watching.